I am going to give you my scalping strategy here step by step. This is a show you do not want to miss. This is a show that can change whether you are making money or losing money. It is time for me to talk about this. I know we had a lot of questions about this. I know everybody asked, how do I do this? And how do I trade? And what's the strategy and whatnot? This is your time to watch this show. It's going to be a unique show. We're not going to do market news. We're not going to do anything else. Gonna focus on the strategy. It's gonna be a short one, but it's gonna be a good one. Let's jump into it, guys. Number one, welcome everybody. Please don't forget to subscribe to the channel if you have not done it already. Smash the like button if you have not done that already as well. It's time to jump in. I see Michael in the house. Asmir, let's go. Smash that like. You guys know it. Short-term bearish, good. We can look at that. Like 15th of 15. Hello, fam. Hit the like button. That's right. All right, and you hear my cause said the nice music. I have a nice new hair. Thank you so much. Hola. Back to back great shows. Let's go. So here's the thing. Let me just show you something. You know, first of all, it's actually it's warming my heart to see these posts and comments and DMs. So please keep them coming. This is what I live for. This is why we come here every single day, you know, completely for free, because I want to see these. This guy, Tito, I just noticed his name. Anyway, says how to be a profitable trader. Follow Fefe, watch his live streams on YouTube, learn and analyze the strategy, try and apply a strategy to your trades with proper risk management. Enjoy the small but consistent gains. Look at this. So this guy has been absolutely killing it since he's following the channel. I'm super proud. Next one. I want to thank you, Fefe. Won my first trade using a 50% retrace model with finding the breakout zones on the lower time frames. I think this method will work for me. Please keep us going. Please keep going over it so it cements in my head. This is gonna be the day when it cements in your head. Then this is a DM I got. Dude, you're God. I mean, obviously I don't think I'm God, but I think that it's very nice that you guys take advantage of what I'm teaching. I just want to say thanks. I've learned so much from you. A month ago I would have just followed your trades, but now I just take them as something to look at. I know still have a good load running ahead, but I can feel the straight to come together. Took the near short a few minutes before you called it and held it proper for good profit. Then we have another one here. I literally just got it today. Hard work pays off. I used your strategy for my entry. TP'd 50% at a level I'm happy with. Move stops to entry and doubled the leverage. Then we have Crypto D here. We're killing it. True alpha. Look at these profits. Being a long time follower as well. So the reason why I'm bringing in this, I don't like to brag. I never really brag. I really try to avoid bragging, in fact. But the fact is that you guys who are here paying attention are making money, and this show will clear every doubt. Okay, so I want you to take your notepad out. I want you to rewatch this show if you're rewatching. Want you to go through it again and again, because this will help you do a scalping strategy that I think can print money in the bull market. Let's go. So here's how the strategy goes. I tweeted this not so long ago, and I said, easy. Want to know how? Tune in on my show. So this is a Doge trade. I took the entry here. You might be looking at this and wondering why on earth would I take this entry. I'll explain to you step by step how I took this trade. And then it's a 58% profit trade. Now, to full transparency, I didn't take enough profit here. I actually messed up because I wanted to take full profit, but I was in a car and whatever. So I only took like 50 or 60%. But anyway, it doesn't really matter. What matters is, how do we do this? Number one, I want to show you a clip from yesterday, okay? This is what I said on yesterday's show. And from this OB, maybe a little bit of wick through, but technically a rejection. And then a little bit lower, maybe liquidating this, coming down to this area. And then from this 2.86 trillion region reversing. I don't think this is going to get broken, to be honest, because we have a lot of built up liquidity above several points of interest up here. So I think that we're not going to go lower. On a short time, we're not going to go lower than 2.243 trillion. So maybe even if we have a drop, it's not going to be more than 3-4%. It's max a 5% drop on Bitcoin. We'll look. So yesterday I was explaining that we're going to have most probably a drop down to this point of interest region and then reverse from there. So this is what I've drawn up yesterday on the chart. I explained why, whatever. You can go back and revisit that stream if that's something that you're interested in. But what I wanted to say that I clearly stated yesterday that if we get a higher high on the 5-minute, a market structure shift, I am going to take a long position on any specific coin where I see strength. Look at this, what happens there. There is a 5-minute market structure shift here, as you see. There's a beautiful 50% retrace, a little bit deeper, and I'm taking my position on Doge. At the same time, when that happens, what do we see? We go into the 5-minute chart. Where is a market structure shift? I'm going to explain everything in a second. Here's a market structure shift. My first entry was here. Then it comes down 50. I measure the 50%. I put my entry where the 50% is. That averages my entry out to this 0.118-ish region. And then on one, I'm out of the trade. This is the scalping strategy I'm going to teach you today, and this is the strategy that you will be able to use on any asset with confidence, okay? Let's jump into the first and most important element of the strategy, which is the total market cap. Now, I see people come here and complain that, oh, Fefe is just analyzing the total market cap. Well, yes, bitch, because that's what shows us if money is flowing into crypto or it's not flowing into crypto. If money is flowing out of crypto, you might have some coins that are popping short term, but overall, if the total market cap is bearish, it doesn't really matter what coin does what, because the market itself is bearish and it is leaving, basically money is leaving crypto, okay? So what you want to know is a couple of things. Number one, we start from the total market cap. Okay, we have to start always from the total market cap. On the total market cap, what you want to find is you want to find areas of interest. I call them POIs, point of interest. So how they work is the following. You have a market structure, okay? And I know it's gonna be a lot. You still have to come to the shows, but if you have been watching the shows, this should clear out everything for you. So this is, let's assume that this is, I'm going to write it up here. This should be, let's say, the 1 hourly time frame, okay? On the hourly time frame, you have a market structure. Very important, and I want you to pay attention here. Market structure is defined by lows and highs and higher lows in case of a bullish market structure, and higher highs and higher lows. Every single time, the market will retrace 50%. So you pull the 50% Fib. This is just a normal Fibonacci that you can find here. You can go on Fib retracement. And when you click on Fib retracement, you will be able to tick out the levels that you don't need. You will be able to design the colors here and whatever. So you can just set it as you wish. I just set everything to black. And it's for me the 0, the 0.5, and the 1 level. Okay, that's just what it is. So this shows you where the 50% retrace happened. This on the bottom here is what we call the discount. You don't have to know that, but discount, and this here we call the premium. Institutions never buy in premium. Never. If you want a good deal, you go to the Asian Chinese store. That's what I do. If I want a good deal, they have the same quality and they have it for a better price. If you want to sell something, I go to the most expensive place because that's where I really can sell my stuff. You know what I mean? So that's the exact same thing that we got to do here. We have to buy in premium if we are bullish, and we have to short in premium if we are bearish. Okay, so that understood, we know that charts have to come back 50%. What happens if for some reason the chart doesn't come back 50%? What happens then? Couple of things. Number one, you can measure still measure only this given leg, because maybe the pullback will come in 2 days, in 5 days, in a week, in a month, you know? You don't know. So you can keep measuring from the bottom where you see you have a reversal, you have a little bit of pullback. I'm going to define everything. What is a pullback and what is not a pullback. But once you have a little pullback, you can start measuring it from here. But you have to know that, okay, here we missed one and that did not come back to the 50% level. So if this did not come back to the 50% level, there is a chance that this is just a trap. A trap to trap everybody who thinks that this is an actual low, because it wasn't formed in discount, so it cannot be a strong low. Great. So if you understand that, what you want to do is you always want to buy in discount, right? As I said that. So when it comes back to discount, you don't buy blindly here because it can still just be a trap. It comes down lower because if you don't complete it, sorry, I actually didn't finish the thought here. So if you don't complete the, if it doesn't come back 50 and it keeps moving forward, you can consider this to be a strong level. But what you have to do is you have to pull the Fib from the bottom to the top of this leg, this specific leg. But at the same time, you have to keep in mind that this is the current low, and you have to move your Fib and identify what is the level where we need to come back after a retrace. So you still have this range in play, this range, okay? Because we didn't come back 50 yet. So of course you have this range that you can trade, and if you see a market structure shift, which I'm going to explain in a second, you can trade this range as well. But technically you have to keep in mind that most likely it has to come back 50% of the major range. And it can happen multiple times. So what you can see is that you get this. And that means you didn't even feel this leg. So then you have another level that didn't even feel this leg. And then you basically this leg is gone, but you have to start pulling the fib from the bottom up. Okay? So once you understand this, this is how you identify what is a strong level and what is not a strong level. So let's do this one more time with moving forward a bit. So I have a market structure here, right? It's moving great. And then something like this happens, right? So what happens is that I have a 50% retrace here. That's good. This is good. This is all good. 1, 2, 3, 4. I have a 50 here. But at some point, I don't have a 50. I just measure it from here and I say, okay, there is a 50 here. Is there 50% here? And then I say, oh, there is no 50%. This did not come back to the discount zone. Okay, so I keep in mind that, great, this is a point of interest. This is a low because this level was able to create a new high. That's the definition, right? So we had to create a new high. We created a new high. We closed above a new high. So this is a strong level, but it didn't come back 50. So I have to keep in mind that we might not hold this strong. It might wick through, might go lower, whatever. What do? I just move my fib up and then I wait for the 50% retrace here. Or if I see a confirmation, I can play it on this specific leg as well. Now, what are point of interest? There are two. Every level that creates a massive push, an impulsive push, is a strong level. Guys, please, I'm not gonna stop the video because I wanted to be able to rewatch it later. Please smash the like button. We have like 181 people watching, only 83 likes. This is the only thing I'm asking. I'm literally giving you all my strategy. I've been suffering for a few years. Just like the video. Okay, so what you have to see is you have to see the structure break with an impulsive move. When the structure breaks, this is a break and close above the previous high. Close means a candle close. So like this, a candle is closing above the level here, for example. If you look here, this is our previous high. We have a candle close above the previous level. It's the same here. Once it closes above, you can confirm that the level that caused that pump, okay, so it's not up here and whatever. The level that caused that pump down here is the proper point of interest, or POI. Okay? This level down here is key. This is a level that will or should be holding if it was formed in the discount zone. Okay? So it was something like this. That means that this level was formed in the discount zone. This level should be holding. But all the way, you can start marking these levels. So you can say, this is a point of interest well, because this broke above, closed above, and it held. And you can say, this is a point of interest because this level created this entire move and closed above. And now it's coming back to the 50%. And the same thing here. This level closed above here and created a 50, it was created in a 50%. So we're all good. So these are the point of interest. What is interesting is it doesn't matter how the chart moves up. So what you can see is that the chart can move like this, and then it can do this. And close above. No. Sorry about this. By the way, guys, with all this, did you guys see that there is like these outages happening like everywhere in the world? It's absolutely crazy. We had some stuff happening here as well while we were like... I got you. It's just a joke. It's just a joke. Okay. So anyway, people were like, "What the fuck is happening?" It's good that we woke you up. Then welcome to the show. So people actually taking notes and stuff. Yeah. Okay, good. All right. So it doesn't matter how it happens. It can be like this, and eventually just push higher. Okay. Thank you. Got me. What? Like he went to the desktop to check if he really got the blue screen. Good. Yeah, that was like, okay, great. Okay, cool. Okay, good. Nice one. Great. Okay, good. All right, so you mark the levels, and when you start marking the levels, you work it this way. Low, high, low, high. Did this come back 50%? I hope it did, because then I have to start again, but... Okay, it did come back 50%. Great. This is a new level, and this is our level. This is our range. Okay, this is our range. Why? Because this is our high, and unless there is a break and close above this high, I don't care about what's happening here. Same way, unless there is a break and close below this level, I don't care what's happening in this range. I don't care because I know this is the range, this is the low, this is a strong low. It was formed in discount, then we created a high. There is enough demand here to push the price higher, okay? So once that happens, a mistake that people do is they pull the FIP from here to here. And as I explained here as well, that's also good. You can do that as well. But keep in mind that it has to come back 50 after closing above. So the fact that you could pull it from here and say like, did it come back 50? Yes, it did come back 50. And then did this come back 50? Yes, it did. Yeah, but that's not how it works. The way it works is that when you have a break above a range, from there, the price has to come back 50% based on the bottom of the range, based on the strong low, the POI that we formed, okay? So in this case, the bottom of this leg would be, or the 50% of this leg would be here at 2.56 trillion in this matter, but the proper low is actually here. And when you really get screwed is, what usually happens, a lot of times happens, is that you think this is the low, you start forming highs here or something, but it builds up liquidity and it wicks through to the actual low and then moves on from there. So anyway, all this explained, now you understand market structures and now you understand how you look at it. Let's go back to the 1 hour chart. Here is how you can start playing the actual scalp strategy. Scalping, by the way, if you're not familiar with the term, means that it's not for a long-term trade. It's literally just taking advantage of smaller price movements. Let's say you have this here, okay? So you mark the levels and you say, I have a low, I have a high, I have a low, I have a high. You know what? I'm gonna make it a little bit tricky. So this is also an additional learning opportunity. I can do it like this. Right. So if I told you, like I would, if I were you, I would take a screenshot of this now, and then you can just see and compare it. How did you do it and how I did it? That's what I would kind of do. But anyway, so you just draw this for yourself, and then you say, what is the low? Where this is the low for me. This is the high. This is my range. Nothing in between matters. Nothing. Okay. By the way, this is the 1 hour chart, just so we're clear. 1 hour. So I start marking my levels. This is my level low. This is my level high. This is my level low, because it comes back 50 after a push, okay? So let's assume that it was like this. So it comes back after a push. Okay, good. So this is my level. So still, what is my range? It's still this. This is still my range because this is just a level that I assume will eventually break the high. Okay, but this is not the level yet because it didn't break. So then what I do, I'm waiting for a break. Once I have a break and close, I confirm that this is our high. I have a new range. What's my new range? This. This is my new range. I have a low, I have a high. Good. So what comes next? Well, I'm waiting. I'm waiting for a 50% retrace. I don't pull it here. Oh, it came back 50, so I measure it from here. And it came back 50, I'm measuring from here. No, because why? Because I always pull it after it created a new high, after it broke above. Okay? So if I pull it like this, it doesn't matter that this is breaking here. This is not a bearish market structure shift. The reason why it's not a bearish market structure shift, because it has to come back 50. It has to come back 50 after it broke above. So what you want to look for is after you come back to the 50, let's wait for what you have to look for. But then it comes back 50. Below the 50, there is a level that's formed, that the lowest level after the pullback, that eventually resulted in a push that resulted, or that caused a break above. Great. I have my new structure here. Great. This is my new range. What is my new range? This is my new range. Anything in between matters, but doesn't matter in terms of my trading strategy, right? So for the range, for the 1 hour range, doesn't matter. Cool. Until this is broken, by the way, we're in the trend. We're in an uptrend. So what a lot of times happens, you can see it on Bitcoin as well, starts dumping and people are like, oh, we're in a downtrend. No, bruv. It's just a pullback. It's an absolute pullback. Until we break this low, we are not in a downtrend. Okay, so let's see what happens. Well, I have a new low, I have a new high, I have a new low, And although I have a market structure shift, this would be the trade actually, but let's not talk about that for now. This is my low. My low. And then I need a sound that says my low, like an old lady saying my low for the doggy. This is my low. My low. Okay. Then you have a high. I think this should be understandable. If you don't understand it, please watch back the video, comment below and I'll help you. Or come to my Twitter. But then you have a market structure. Now the question that everybody has burning inside them, okay, but how do I actually take these trades? Well, here's what you do. If you are on I also talked about this a lot, but if you are on the daily chart, you always take confirmations on the 4 hour. If you are on the 4 hour chart, you always take confirmations on the 1 hour. On the 15 minute. If you're on the 1 hour, you take confirmations on the 5 and 3 minutes. 5 and 3 minute. And if you're on the 15 minute, you always take confirmations on the 1 minute and below. Okay. Screenshot this as well, look back. This is the way. So if this is the 1 hour chart, I have to see a 5 minute confirmation. I can see a 3 minute, but rather a 5 minute confirmation for a reversal within the range. Okay, so what does this mean? It means that we're gonna see actually this is a very good example, but let me just do it again. So what you want to see that now you have a range. This is my range. This is where I'm looking to get a scalp. Okay. So what I want to see is I want to see a retrace. Okay, where do I get the retrace? Well, I get the retrace to the 50%. Great. Perfect. So I have to get a retrace to the 50%. I mark that level and I say this here is my area. Then there is a lot of things to this. So you can look at fair value gaps, you can look at breaker blocks, you can look at imbalances, you can like a lot of other stuff. So I'm boiling this down for you now, but in theory, you got to look for a retrace to the discount zone. Two ways of retrace. Number one, this bad. Why bad? Because there's one participant in the market and that's the sellers. That's showing that it's not good. It's not great. What you want to see is that it comes down in a wave like this. It's building up liquidity. When you have a trend line like this, that's very good because that's usually going to be taken. Then you're going to see this. If it comes down like this, it's a very good indication that your POI, your point of interest down here will work and your level down here will hold. Okay? So you want to see this. When you see this, what you want to identify is when you identify the 50%, where the reversal happens. So you see this happening and then you get to the discount zone and you're wondering, anything above here doesn't matter. Doesn't. It does, and you can trade that as well, but I just want to give it to you in a safe way, okay? So it doesn't matter. Don't bother. Anything in the premium doesn't matter. Anything above the 50% does not matter, okay? Cool. So what I want you to focus on is the following. When you get down to the 50%, you have to see one thing and one thing only, and that is a 15-minute market structure shift. It can happen here, and here, and here, and here. It can happen anywhere in the discount zone, anywhere. It doesn't matter. Once you see a 5-minute market structure shift, you can get your positions in. Now, we're going to circle back to this in a second, but I want to explain to you what a market structure shift is. When the market goes to a certain way, you have pullbacks. The way to confirm the pullback, let's say this is the hourly chart. Now, if this is the hourly chart, usually what it looks like on the 5-minute is something like this. You get the point. So it's like, even though it looks like this, very smooth on the higher time frame, it looks like little chopping, little pullbacks, little price action on the lower time frame. What you want to find is where does the reversal happen? So now in this, if I mark this and this and this, and this and this is what you are seeing here. This basically is what you're seeing here. How? Let me show you. You have a low, you have a high, you have a low, you have a high, you have a low, you have a high. On a higher time frame. But on the lower time frame, you see you have a lot of points. You have a low, high, low, high, low, high, low, high, low, high. And as you go lower in the time frames, you will see more price action. Okay? So when you look at this is the exact same picture, but this here is the 5-minute here. And that here is the hourly. So what you want to see is you want to wait for a retrace to any level, potentially 50 as we discussed, and from there see a higher high on the lower time frame, in this case the 5-minute. Why? Because if you want to see a reversal of a trend, if you want to see, like if I want to say it correctly, a continuation of the trend, you have to see a reversal here. How do I know that we continue the trend? Well, I know because we broke above, and we broke above, and we broke above. But for me to see an hourly break, I need to see a break on the 5-minute, right? Because I need to break the 5-minute high before I break the hourly, and I need to break the hourly before I break the 4-hour. And if I need to break the 4-hour before I break the daily. So it goes up like this. So for that, I need to see a market structure shift. And on the lower time frame, if you zoom in, this is exactly what you have to do. The exact same way that I explained on the higher time frame, that's what you have to do on the lower time frame. How? Here. You mark the high, you mark the low, a high, a low, a high, a low, a high, a low, a high, a low. Then you are in the discount zone on the higher time frame, right? You're already looking at the hourly chart. Okay, I'm in the discount zone. Cool. So now I just have to see a higher high on the 5-minute. How do I do that? Well, it just has to be a higher high. Once I see a higher high, I'm game on. That means I have a confirmation that the continuation is happening. So we are reversing on the lower time frame to continue the trend on the higher time frame. So what you see here is the market structure shift. Market structure is defined by several things. Number one, a strong market structure shift. Okay, strong MSS is V-shaped recovery. That means that it's like this. It's not like this. Okay. Can happen, but that's not a strong market structure shift. And I don't know where did my writing go. Anyway. So V-shape recovery. Then you have to see fair value gaps. So you have to see imbalance in the chart. And you have to see three consecutive candle break. What does that mean? It means that this region here has to have at least 3 bullish candles to mark a proper top. So if you look here, for example, on the proper chart, I'm going to show you now. If you look down here, this here is a strong level because it has at least 3 green candles. Now, this is not consecutive candles, so it's not a proper shift. But let me just show you one where you could see it. Let me see. I could take this as well. It only has 2, but it's proper. So you have 2 candles. It comes down and the impulsive move. There's impulsive move to the upside. And let me get. I just randomly picked this. Look what it comes back. It comes back 50. What does it do? Shows a market structure shift and then moves. So anyway, so you have to see a 3 candles up. You have to. So for example, it's coming down like this. You have to see 1, 2, 3 green candles and then a dump, a close below this level, and then a close above this level. That's a strong market structure shift. Now, once you see that and you see it in the discount zone, you can confirm that you have a reversal happening from that level and you can potentially take a trade. Now, I don't know how much you understood from this, but now I'm going to put everything together. And if you rewatch the show, I think you will understand everything. So let me just delete everything and let me show you step by step on the real chart, okay? So what do I see on, let me just delete everything here. Let me just delete everything here. So what do I see here? If I go onto the 15-minute chart, I see, let me just delete this as well. I see that we have a market structure here, right? There is no pullback all the way up here. So in theory, again, if you watch the channel, you know, I'm keeping in mind that we can come down all the way. This is our bottom. We broke this high here, right? So we have to come back for the 50% retrace because there was no 50% retrace after a break. Okay? But, so technically we have to come down to like 2.13 trillion. But what you can also see is that there is this leg, which is an impulsive leg. This level caused the actual breakthrough above here. This was the actual level that caused it. Even though this was the bottom, this was the actual level. So we could technically see a reversal from this region as well. We could trade both because we're scalping. We're not in for the major reversal. We're in for a scalp. So when you identified, I have 2 levels. I have this level and then I have this level down here, which if you pull it from the very bottom, I showed you a second ago. I got it almost right. But it's down here. This is the second level. These are the two levels. But there is another level. Because if I zoom in, you will see, let me delete again everything. If I zoom in, you will see that this has a after a massive push up here, we have a massive pullback down to what level? Down to these levels. Do you see that there's 3 consecutive candles here? 3 bearish consecutive candles. This marks this as a proper low, a proper point of interest. This is what I explained, 3 consecutive candles. So if this would have been broken, it would have been a strong market structure shift, and we would have probably continued our way down to the hourly and the 4-hourly retrace, as I explained. But because we didn't do that, we can go onto the 15-minute chart and be like, okay, did we close above? Yes, we did. It's actually a V-shaped recovery on the hourly. Look at this. Okay, great. So that actually means that there is strength here. There is strength in this level. This level pushed up. Okay, so what is our new point of interest? What level was responsible for closing above here? Again, there was no 50% after the break, right? There was no 50% after the break, because where did we break? We broke here. If I put my Fibonacci here, did we get a 50%? No, we didn't. What do? I move my Fib. Cool. Did we have 50? We got it here. We got the retracement here. Great. So here is what we're looking for. Now that we have the retracement, we can confirm that this level here, was the low and this was the high. We confirmed what? We confirmed our range. This is our range, and the 15-minute range. Anything in this range, and the hourly actually, anything in this range is so to say irrelevant for the higher time frame, because we don't know what's going to happen here. What we know is that we are in a range. If we break above this level, we we go continue the trend. If we break below, we are shifting the trend. That's all we know. So then I can just redraw my POI to this level here, because this is my actual level that broke there, right? This is my final push down. I can actually put it up here. This is your final push down. This is your point of interest currently on the 15-minute chart. This should hold for a scalp, okay? So what you're looking for a 50% retrace. Let's see what we get here. We get a 50% retrace. And again, if you watch the show the past 3-4 days, you will recognize this pattern. We came down, came back 50. What happens? Beautiful pump. So we have from coming back to 50, we pump like 1.5%. Great. But what's the problem? The problem is that we don't have a 5-minute market structure shift. We don't have it. Why? Because this is our range. As we're coming down, we have a high, we have a low, 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 and then we have a range. There's no break above. There's no break above. Plus, we don't have time for that, but it is building up liquidity. So by building up liquidity, and there is no break, and there is an impulsive crash, I told you on the show that we are going to come down to this POI. I told you yesterday. This was that we discussed yesterday. This. I marked it here, and I said, let me just go back and here. A little bit lower, maybe weak. We are going to see a rejection here, and built up. For me, it's much more likely that we are going to see a rejection here, and from this OB, maybe a little bit of wick through, but technically a rejection, and then a little bit lower, maybe liquidating this, coming down to this area, and then from this 2.86 trillion region reversing. I don't think this is going to get. So what I said is that we're going to come down. Exactly the reason why I said that is because if you look at this, you see that it's building up liquidity. This was building up liquidity. There is no close above there, and there is no possibility of closure above it. This is why I said I possibly wick through because of the liquidity, but there is nothing there. So what do we have? We're waiting. What did I say? Within the range, doesn't matter. Doesn't matter. What happens then? Well, what happens usually is we break to one side of the range. Now we broke below. That means that we continue on a lower time frame because we still hasn't broken below the major level. So we're still bullish. That's why we don't take shorts here. We only take longs. So what happens is we have to see a market structure shift after coming into a POI or after coming down to the 50. See what happens here. It's yesterday at about 3 hours after the show. You have 3 green candles here. Yes, they are not consecutive, but we have 1, 2, 3 green candles in this, so to say, POI. Then what you see is you have a dump from there, a close below, very important, as I explained in the market structure shift. You have a market structure break, which is like breaking below the previous low. And then you have a V-shaped recovery and a close above, a market structure shift. Now we're getting there. So you identify that we are bullish on the higher time frame. You identify that we have a low broken, a 5-minute low broken. And then from there, we have a 5-minute market structure shift. Okay? Couple of things. Technically, if you look at this, this is the actual level that broke. So you know that it has to come back 50. We have to go back at least to the 2.3 trillion up here, you see? Because what did I say? What level broke the previous low? It was this level. Did this form in the premium zone? Yes, it did. Okay, so this is a strong level. That means I can pull my FIP from here and expect a reversal to the 50% after I see a 5-minute market structure shift, which I saw now. So what does this mean? This means, and this is the essence of the strategy, is that I can take my position, and because there's a market structure shift, I can place my position up there, and that usually target 50% at least, but my experience shows that you can get a 1-to-1 at most cases. Okay? So when that happens, you're waiting for what? The 50% retrace. That's what I always say. So you get your position in because it can start rallying. It can start doing this, you know, and then you can't catch it. But I wait for it, and then I wait for the 50% retrace. Where is the 50% retrace here? Down here. So then what I do is I get my rest 50% of the position here, and I average my entry down. Immediately, my profit goes down as well to 1-to-1. Here. And then you're just waiting. And you are out of the move. Several ways to get out. Number one, you just sell 50% of your, so this would be here. 50% of your position, you're out. If you can monitor the chart. Second, that you actually wait for a break. Again, what? A market structure break. Look at this. This is a market structure break now. It had a massive pump. It closed above. It took liquidity. It did not form in the discount zone. I agree with you, but it doesn't matter at this stage because we came back. It's still just a retrace on the lower time frame because practically this is the proper high. So what you're waiting is that you can wait for the break and then get out with the rest of your position, get out immediately, or you can get out at the 50% retrace here, and therefore give it potential to catch something like this massive move. That's basically the strategy. So what I did, when you see and identify these levels, you can't really long the total market cap. So what do? Well, once you find a market structure shift on the 5-minute, the way I explained on the total market cap, you look for tokens that has the same trajectory. You look for tokens and you go like, okay, so let's see Doge. And then you look at it on the hourly and you say, okay, it has to have a retrace here because that's what we say. Okay, so it has to come down to the 11 cent region. Cool, I'm gonna keep that in mind. But what else? Well, I have a bottom here and I have a top here, so it has to come down on this leg as well. Okay, cool, so that's like 11.5. Great, I have to keep that in mind. And what do I have? The same thing as I explained on the total market cap. We have a leg here as well. What is my low on this leg? There is 3 consecutive down candles, as I showed you on the total market cap as well. 3 consecutive down candles here. That means that this is my proper low, and this up here is my proper top. This here is a range. A range. Nothing in between matters in terms of the direction. But what matters is, if we would have closed above here, this would have been the low, but we didn't close above there, okay? So what I'm looking for, again, is a dump and a 5-minute market structure shift from there. Well, I saw a couple, but here, I didn't have a market structure shift on the total market cap. This is why this is tricky. Did it rally? Yes, it did. Could you have taken it? Yes, you could. But because there was no shift in the market structure on the total market cap, I did not take it. It's risky. So what I did is I analyze everything and I say, okay, so the same way, I go high, I have a low, I have a high. This breaks above where? Here. So this is my actual high, but this is the high that I need to consider. So if I pull the proper 50% retrace, we should come up to this 12 cent region. This is my high. This is my low. We are actually down in the major POI that I explained on the hourly. So the only thing I have to see is a 5-minute market structure shift. And guess what I see? I see a 5-minute market structure shift here. At the same time, it is happening on the total market cap. I have a clear close below here, and then I have a clear close above there. Therefore, I have a V-shaped recovery, and I have a proper reversal signal. What do? I get 50% of my position in here. And the target what? I target 1-to-1. 1-to-1, right? This is what I'm targeting. What happens next? What happens is that I'm waiting for a 50% retrace. When the 50% retrace happens, I have a limit order for the 50% down here. A limit order for the 50% down here. That averages down my entry. So I got 50% up here, got 50 in here. So probably my average entry is around here. And I either target, again, I target 1-to-1, which I did here. You target 1-to-1. Or you can target all the way to the 50% and just wait for a rejection like you see here. That's basically the strategy. And then you're out. Now, very important. There is one thought, whether this, how do you read liquidity and what do you do and whatnot. There is a very good saying that someone in the community said, that is, if you have an elevator up and the elevator down and stairs up, that's not good for you. This is an elevator down and then stairs up. That means you are building up a lot of liquidity, and that means you have another elevator down. But if you have it the other way, if you have elevator down, stairs down, after an elevator up, you have a stairs down, you're most likely to have another elevator up. So it's very, very important to play it this way and consider everything that I explained. I thought it was going to be a shorter show, but guys, I gave you fucking everything. Everything. I literally, on the scalping side, I give you everything. I'm going to look through, I'm going to read through the comments now. I'm actually going to the studio here with our 𝗘𝗘𝗘𝗥 talk show. By the way, guys, whoever faded 𝗘𝗘𝗘𝗥, I have a message for you. This is the message. Let me see. Someone is saying, smiling face. Yes, thank you so much. The $1 every day. I'm happy. What's up, working for this one? Nice. I have position open on Gala 100x. Don't go 100x. Brett, after your show, hope it works. Best 𝗙𝗘𝗙𝗢 on YouTube. Hi, Fefe, I love your streams. Very informative questions. There's a lot of talk about the bullish run stages. 1, 2, high caps, and the 4, everything else. What is bear stages? What are the... We can talk about the bear stage later. Good morning. Good morning. Love this lesson. I'm so happy. Good explanation. I'm so happy. No 50% retracement inducement. Yes. This is really cleaning up questions. I had your mind reader. Thank you so much. Sorry, taking notes. Code alive today. Hottest alpha in the web. I'm happy. Is this all on the 1 hour? Well, it's the same. It's the same on all time frames. So it depends on what you're trading. You got to keep in mind the lower time of confirmation. So if the pullback just touched the 50% level but no lower, can we get entry and trade? Must wait for... Again, you can, but it's much more risky. It's like confirmations. You know what I mean? So it's like more confirmations you get as more you add to it. I was like, no, nice one, Fefe. Thank you, thank you, thank you. It got me because I'm full screen mode. Okay. Done well. Funny. Just restarted my... Just restarted my computer, now watching on my phone. Alpha Finder, thank you so much. Alpha Finder, thank you so much. Do you measure 50% from the wick or the body? Wick. Education is key. Yes. Hey, Fefe and Cause. Scalps, 18 wins. Someone's saying 18 scalps, 18 wins. Listen to Fefe. I'm so happy. You no need to buy, no need for levels. Buy anywhere, you will retire early. That's for sure. You will retire in the retarded home, maybe. Just got here. I'm late for school. A little bit. You gotta rewatch the show. Escalator up, stairs down method. Yes. What's up? Go a little to the left, to the side. Okay, still getting ads on the left. It's on your side. This is the real juice. Nice start tick. I'm so happy. Love your teaching, man. I'm so happy that you're here. Measure those like peeps. This feel alpha. Yes. Always look top down. Start on highest time frame. If no breaks, then move next time frame down. Exactly. We can't see good, Fefe. You're hiding the chart with your beautiful self. Sorry about that. Like the smash button. Awesome. Great. Fantastic explanation. You keep it simple and easy to follow. I'm so happy you like it. Do you want to measure it from the wick or the body? Always the wick. Amazing. Thank you. This is gold. I'm happy. Thanks. You're welcome. Great show. Thank you. Hit like for another alpha. I hope people realize what you just gave out. That's fucking ticket. I agree with you. Did you upset your hairdresser? Just asking. Funny, Michael. Funny, fucking. Fabulous. Awesome content today, Fefe. Easy to understand. Thank you. Thanks, gonna learn it. Great. After Binance party, I got sick. GM, Fefe. GM. Thank you. You're welcome. Hello, Papi. Love this strategy. You did get me. Nice. Super chat, $20 from Chris. Most valuable info I've ever heard. Chris, thank you so much. I genuinely appreciate you being here, supporting the channel. Means the world. Top G. Are we doing token requests today? No, I have to jump. Great strategy. I'm happy you like it. We need to clip this section. I'm happy it's the whole 40 minutes. Thank you. Any tip on risk management? I think I'm gonna drop a risk management video on Banter next weekend. Definitely put it on. That was so educative. So much respect. Thank you so much. Brilliant. Great show. Thank you for schooling every day. Sorry if you're so slow at learning, Fefe. And had this, it took me a lot of time, so it's absolutely fine. It's absolutely fine. Even when you're gonna understand the strategy, it will take you a lot. This is a trading strategy cost, Fefe, this year trading strategy costs 2,500, but you help us in life. You're a destiny helper. God bless you. This stuff that I explained to you costs way more than 2.5 grand, guys. This, like, people will charge you for this that I just explained to you. You're changing game with this one. I'm so happy. Will you do live trades with this strategy? Yes, we're starting. I'm going on a holiday next week, and after that we're starting every weekend. We are just having a 5-minute market structure shift on Jupiter soon. We can look at that if it happens. Is it too late to buy 𝗘𝗘𝗦𝗢𝗏? No. I don't know. Not financial advice. I don't know. Can you do ETH to SOL chart if you have time? I don't want to do charts. Definitely need to put this to practice. Still don't get it, but okay, you have to rewatch. When the camera for Cuz? I told him we have to sort it. He didn't sort it for like 3 weeks now, so I don't know when he sorts it. Cuz you still need a couch? Yes. Oh, my chair arrived, guys. I got the email. My chair arrived today. This is the day. When are you going to start the 110? Not next week, but the week after. The week after we're starting. Can we check Arrow? No, not now. What time frame does the MSS candle close need to be? Please look back the video. Because please buy coffee for this amazing lesson. Please buy him a coffee. Great haircut. Thank you. Man, fair. Thank you for the lesson. 2 pages of notes filled. I'm so happy. Trading stickers. Thank you. Hey, could you do costs? Not now. Risk management video would help a lot. Deserve an ice cold beer now. I agree. Have a great... Oh, Europe. I was just going to ask if you got that new hair yet. Yes. New chair yet. Yes, guys. All right. I think that's it. If you have any questions, I'm going to stick here for another 5 minutes. Until then, I'm actually meeting Ren and the school team. We're finalizing the course content. It's gonna be an intro to crypto, everything about security, everything about you can know about to basically get into crypto narratives and how to do and security and all that. It's gonna be great. 100x informative. I agree with you. Thank you. I truly appreciate it. So guys, I hope that this made sense. I hope that you will use this strategy. Do you see anything else on the charts, like anything that we can look at? Do you think anything that we can take right now? I haven't scrolled through anything yet, but look for this. There are a bunch of positions. I do think we are gonna fall. By the way, I do think we're gonna have a short term down, a short term up, a short term down. No worry, going on vacation through Europe. I'm going in Europe, yes. For real, I have learned a lot from you. However, if you see a strong rejection on 5-minute time frame, can be short. I would not short because it's bullish. I'm so signing up for your course. I'm so happy. Banter and 100x collab. Woohoo! It's not like it's a Banter fam channel. Like 100x Club is part of the Crypto Banter fam, Crypto Banter brand. So we are one. Great show, Fefe. Thank you. With learning. Say hi to Ren for me. I will. Trump Mania. I haven't checked it. Absolutely great show, Fefe, as usual. Thank you so much. STX looks fucking nice. Okay, let's take this trade, guys. I'm gonna give you this one more. I have to go. I really have to go. I have a meeting in 5 minutes. Let's implement this one last thing. Let's go. Anything in this show is not financial advice, only entertainment purposes. Okay, guys. So please keep it and treat it as such. Let's go. What do I see here? The same thing. Look, I marked my levels. This was the high. We broke that. That's great. What is the level? This is my lowest level. This should be the high, but this didn't come back, right? So this is another high. This didn't come back. But what we see here is the following. Oh, but it's actually breaking below. It's actually breaking below. So yeah, so here's the thing. You have one level here because this is a break above. There was no 5-minute MSS. Or 15-minute MSS. You see, what is my level on the lower time frame? Even though it came back 50 on this leg, there was no break above. then it comes down here. There's no break above. Then comes down here. There is no break above. Comes down here. No break above. No break above. No break above. You see what I'm saying? So there's no break above except not even now. Okay, so on this leg, there is no break above. However, if you consider that it could, and it breaks below, so you could say, oh, so we are going lower. Yes, but if you consider that it's actually countable on this leg as well. Did it come back 50 here? Oh, it did. Okay, forget what I said. Forget what I said. So it comes back. This is the POI. The question is, did we really close below? If we did close below, then it's lost. Yeah, we closed below. Technically, you can pay the... Yeah, we could pay... It's gonna retrace. So you see... Okay, so this is also worth a mention. So on the 1 hour, we closed below, and I really have to go. Like, really have to go. We closed below. So what do I expect? Because we have a close below, I pull it from the top, and I say we need to see a market structure shift and the retrace to the 50% region, which would be up here at 1.88. So technically, although we close below, so that's short-term bearish, what you could technically do is say we have a market structure shift up here, but it's not even a market structure shift. This is not a market structure shift. This is not a market structure shift. We have a high, we have a low, we have a high. This closes below here. This is the range. This is just in the range. This did not close below. This is just a wick. So this is nothing, but yeah, almost excited, almost excited. So this is nothing. We're waiting for these levels to break. Guys, I have to leave. I'm so sorry. I hope that you enjoy this. Don't forget that the ticker is 𝗘𝗘𝗘𝗥. I want to show this as well. Like if you faded 𝗘𝗘𝗘𝗥 is up at 26, 27 million. And it's just getting started. So guys, thank you so much for watching. Truly appreciate you. Let me know in a comment, how did you like this show? And if you did, just come back tomorrow, subscribe to the channel, smash the like button, and follow me on Twitter that you see up here on X. Guys, thank you so much. I believe I will see you in the next one. Have a good day. Take care.